The carbon trading business was seen as a bonanza for companies in Africa emitting carbon into the atmosphere.
What it all basically means is that countries like South Africa can make money by cleaning up the blue African skies. Now, under the Kyoto Protocol, which is in force until 2012, with negotiations underway to extend it even further, South Africa is designated as a developing country. Now, what it means is that companies here can reduce their emissions. Now, 1 ton of carbon is equal to 1 carbon credit. Then they can sell that credit for US dollars to a company in the developing world, say Europe, to help that company achieve its carbon emissions reductions.
But it's not being used enough in Africa, according to Jeff Sinclair. The London-based carbon trading expert for Standard Bank is in Johannesburg for a conference aimed at increasing investment in African carbon trading.
You know, there's a substantial amount of money that is actually available for Africa to tap into if we want to. And the market is growing at about 25% a year. At the same time, there's a lot of international movement to provide extra financing support to developing countries for emission reduction projects in a separate mechanism through the Kyoto Protocol, and they're planning for $100 billion a year to be available. So, you know, just in terms of pure opportunity, there's quite a lot. The carbon market itself, the whole carbon market, traded about $180 billion last year, so that's roughly the same size as the copper market.
So why then aren't African companies catching on to these opportunities?
Well, I think there's a number of reasons. One is just straight awareness. The second is that a lot of African companies prefer to concentrate on their core business rather than something to do with carbon credits, which is some international treaty. And the third is that actually it takes a long time for these types of mechanisms to become accepted. And to be honest, I think it's more the latter. People are taking a while to get to know the mechanism and to start to understand it and believe in it. The local financial institutions, you know, things don't happen overnight, and so it's taken a while. I guess the optimistic part of that story is that it's now starting to happen.
World investment in the carbon trade is worth $90 billion. Right now, South Africa has a mere 2% of that investment. The whole of Africa has just 3%. Jeff Sinclair says the continent should be pushing its share of that investment up to 10%.
What do you think is needed to unlock investment in this industry here in Africa?
Those negotiations are actually going on this month in Cancun, and next year in November they'll be in South Africa, actually. And so there's great hope that those negotiations will be resolved in South Africa for the international scheme so that investors can invest.
What is at stake if nothing's done?
Well, two things. One is that Africa will miss out on that investment. But the second, probably more importantly, is that climate change is happening. Africa is the most exposed continent in the world to the effects of climate change. So Africa is going to suffer more than anyone else from climate change happening. And so, if the world doesn't grapple with that, and if Africa doesn't grapple with that, it'll cost us all a lot of money.
Failing this, the cost is high. Experts estimate that to tackle the planet's emissions problem will cost 1% of world GDP. If nothing is done, the damage could cost up to 20% of world GDP.